World stock markets crashed this week. I long ago ran out of superlatives to describe what's been happening on the markets, but this was quite something else. We'd already had the crisis afflicting the world money markets and the credit markets. It had always seemed a little surprising that equities hadn't joined in. This was the week that the crisis finally caught up with equities, and therefore the week that many people who have their life savings tied up in equities finally realised how severe the situation is. Now, to put this into historical perspective, the S&P and the Dow are both down about 18.2% for this week. Both were down comfortably more than 20% at one point. In terms of superlatives, that's worse than the week of the Black Monday crash in October 1987. It's worse than any week of the Great Crash at the end of 1929. There was, somewhat irritatingly, one week that was very slightly worse than this in 1933. It's the second worst week on record for US equities. Around the rest of the world, it was a quite remarkably uniform sell-off. Most of the large developed markets were down somewhat more than 20%. We saw Japan's Nikkei fall more than 9%. Today we saw the UK's FTSE 100 index fall more than 10% at one point. And one of the things that's most spectacular about this fall has been the way in which it has been so indiscriminate. Whether you divide things by geography, whether you divide stocks according to whether they're large or small market cap, whether you divide by industrial sector, there's really very little difference to be drawn. To dwell briefly on today, in Wall Street trading, it was possibly the most volatile day there's ever been. The VIX index, which measures volatility from how much people are prepared to hedge against volatility in the S&P using options, went above 70 for the first time ever today. Before this week, it had never gone through 50. The total trading range of the Dow Jones Industrial Average during today was more than 1,000 points. It varied that much during the course of the day. You could say that there was something positive to be seen in the fact that we had a very sharp sell-off in the morning. The main indices were down more than 7%, and we ended up only 1 or so % off for the day. You could see some glimmers of light in that recovery, but I wouldn't want to put too much weight on it. Why has this happened? Primarily, obviously, fear has completely overcome greed. It would appear that a lot of hedge funds are deleveraging, i.e. they're being called on their loans and are forced to sell investments to meet that. Added to that, there's a lot of evidence that retail investors through mutual funds, 401ks and the like are now getting out of the market, forcing redemptions and therefore forcing sales. The news, generally speaking, as we've seen ever more aggressive government interventions during the week, and they've failed to turn around the credit market and the money market. With each one of those indications, the stock market has got more scared. Are we at the bottom now? Well, very much depends on what happens over the weekend when the world financial policymakers will very conveniently be having a meeting for the G7 summit. The likelihood that something comes out of that is high, and we will await what kind of response we get out of that. The falls we've seen are quite remarkable. It's interesting that stocks that really should be very resilient against a recession have been falling almost as much as the rest. You would think that those who haven't borrowed and who have a reasonably long investment horizon would now be ready to pounce. And I've heard quite a few people suggest that unless there's really bad news over the weekend, you could see quite a lot of buying at the opening on Monday. Whether that will mark a bottom for the entire episode, who knows? But the bottom line, this was a crash this week. Let's hope things are better after this weekend.